Petrodollars are U.S. dollars earned by oil-exporting nations from the sale of oil. The term refers not to a distinct currency, but to the U.S. dollars that dominate the global oil trade. The global economic landscape has been profoundly shaped by the petrodollar system, a framework where U.S. dollars are the primary currency for international oil transactions. This system, particularly through a process known as petrodollar recycling, has had wide-ranging effects on global finance, trade, and geopolitics, history and establishment. The concept of the petrodollar gained prominence in the 1970s, following the collapse of the Bretton Woods system in 1971, which ended the U.S. dollar's convertibility to gold. To stabilize the dollar's value and maintain its global supremacy, the U.S. entered into a strategic agreement with Saudi Arabia, the world's largest oil exporter. This informal agreement involved Saudi Arabia pricing its oil exclusively in U.S. dollars in exchange for U.S. military protection and access to U.S. financial markets. This arrangement created a continuous global demand for the dollar, as countries needing to import oil had to acquire U.S. currency to do so. Petrodollar recycling. A key component of the petrodollar system is petrodollar recycling. This is the process by which oil-exporting countries, particularly those with large surpluses like Saudi Arabia, reinvest their excess U.S. dollars. Since these nations often earn more from oil sales than they can spend on domestic development or imports, they invest their surplus petrodollars in foreign assets, with a significant portion going into U.S. Treasury securities, stocks, and bonds. This recycling primarily occurs through two channels. Investment in U.S. assets. A significant portion of these dollars is invested in U.S. Treasury securities, stocks, and bonds. This inflow of capital provides a constant demand for U.S. debt, helping to finance the U.S. government's budget and trade deficits at low interest rates. Spending on imports and development. Oil-rich nations also use their petrodollars to purchase goods and services from other countries, particularly high-value items like military equipment, technology, and luxury goods. This stimulates the economies of their trading partners, creating a cycle of interconnected global trade. This recycling process benefits the U.S. in several ways. It provides a steady influx of capital into the U.S. economy, helping to finance government deficits and keep interest rates low. It reinforces the dollar's role as the world's primary reserve currency. It provides liquidity to global financial markets, which helps to support global trade and economic growth. Key economic impacts. The petrodollar system and its recycling have had several crucial effects on the world economy. Reinforcement of the U.S. dollar's dominance, by making the U.S. dollar the required currency for oil trade. The system created a perpetual global demand for it. This cemented the dollar's status as the world's primary reserve currency, giving the U.S. significant financial and geopolitical power. Countries needing to buy oil must hold dollars, which in turn encourages them to invest in dollar-denominated assets. Support for U.S. financial markets and low interest rates. The massive influx of recycled petrodollars into U.S. financial markets acts as a powerful source of liquidity. This keeps U.S. bond yields low, making it cheaper for the U.S. government and corporations to borrow money. This has been a key factor in financing America's large trade and budget deficits without causing a major currency crisis. Creation of sovereign wealth funds. The enormous surpluses generated by petrodollars led to the establishment of some of the world's largest sovereign wealth funds, SWFs, particularly in the Middle East and Norway. These funds manage and invest their nation's oil revenues globally, diversifying their economies and impacting asset prices in various sectors, from real estate to technology. Volatility and global imbalances. The system's stability is heavily dependent on the price of oil. When oil prices are high, petrodollar surpluses grow, leading to increased capital flows and liquidity in global markets. Conversely, a sharp drop in oil prices can lead to a withdrawal of these funds, causing market volatility and economic challenges for both oil exporters and countries that rely on their investments. This can create global imbalances, where some nations run large trade surpluses while others, like the U.S., maintain significant deficits. Interdependence and geopolitical leverage. The financial ties created by petrodollar recycling have fostered a complex web of economic interdependence. Oil exporting nations, while gaining immense wealth, are also tied to the stability of the US dollar and the US financial system. This relationship provides the US with a degree of influence over these nations' foreign and economic policies. Challenges and the future of the petrodollar. In recent years, the petrodollar system has faced challenges. Some countries, most notably members of the BRICS economic bloc, Brazil, Russia, India, China, and South Africa, are actively exploring alternatives to the dollar for international trade. For instance, China has promoted the use of the yuan, or petro-yuan, for oil transactions. And Russia has sought to bypass the dollar in response to international sanctions. However, the US dollar's dominance is unlikely to disappear overnight. The sheer size, liquidity, and stability of the US financial market are unparalleled, while the petrodollar system's influence may be shifting in a more multipolar world. Its legacy continues to shape the fundamental flows of global capital and international relations.